Hey guys, welcome to another Damilola Forex Academy teaching. In today's teaching, I'm going to be talking about why candlesticks in themselves are not reliable, and instead of trading candlesticks in themselves, trade them in a bunch as chart structures. Okay, so let's dive straight into the topic. Candlesticks, as we know, are the individual price movements in the market, and candlesticks can be found from the 1 minute time frame to the monthly time frame. Okay, then what are chart structures? Chart structures are the coordination of these candlesticks in the market. Chart structures are these candlesticks put together. Instead of reading these candlesticks as an individual price movement, chart structures allows us and gives us that opportunity to read them as a bunch. Okay, and reading them as a bunch, we're able to get more accurate information and more accurate data of prices. Okay, so with candlesticks, we all know that when it comes to candlesticks, there are different type of candlesticks, right? We know about the doji, we know about the AMA, we know about the inverse AMA, all of these different names that have been coined out that we call these candlesticks, right? However, it's important to note, right, that for us as next level professionals, we cannot rely on these candlesticks themselves to predict the future movement of prices. This is because prices can show you like an hammer and it would not move in that direction. An hammer is supposed to indicate a bullish movement, right? However, prices can point out an hammer and may not move in that direction. And price can also point out an inverse hammer and may not move in the bearish direction also. Okay, this is because candlesticks themselves can just give you random information. Okay, so that's why we should be able to collaborate these candlesticks in coordination, known as what? Chart structures. Chart structures are the ones that will give us the top level information. Okay, for those that trade candlesticks, they are not in the level of those that trade these candlesticks as a bunch together to get accurate chart data. Okay, reading candlesticks together is for professionals, is for the next level traders, while just reading candlesticks themselves will not give you that accurate information. Okay, so let's go ahead and just talk about this candlestick, these chart structures, and what they are. Okay, so it's important to understand that that chart structures, just like we talked about, are the coordination of candlesticks on the chart. Okay, and it's important to note that with the proper knowledge of chart structures, you can be able to flawlessly and effortlessly predict the future movement of prices, because rather than just picking 1, 2, 3 pieces of candlesticks that could just give you very random information. I mean, it could just give you a random information, tell you that, oh, market is, this is a doji and stuff like that, but those information are not very relevant in actually making long-term profits in the market. Okay, so that's why we must trade using chart structure. Okay, so we said chart structures are the coordination of candlesticks on the chart. And it's also important to note that that we have two types of chart structures. Whenever you go onto your chart, there are three types of chart structures that prices could show us, right? But two are the only ones that are relevant to us, right? So what is the first chart structure? The first chart structure is known as the bullish chart structure. Then the next one is known as the bearish chart structure. Then what is the third one known as? The third one is not relevant to us, like I said, but the third one, I'll just put it as a ranging market. Okay, there's no money made in the ranging market. We make money when the market is trending. Okay, so when the market is trending upwards, we make money during, we make money as we're able to predict the bullish chart structures, and we make money as we're able to predict the bearish chart structures. Now, one of the disadvantages of reading candlesticks alone is that these candlesticks can give you buy or sell information in a ranging market, and those will just be completely false information. It could tell you that, oh, there's an hammer, place your buy, and it's a false information because that opportunity is in a ranging market. And it could show you that, oh, there's an inverse hammer, place your sell, and that is not true because that opportunity is in a ranging market. But chart structures will never give you a false information. If it tells you that the market is ready to buy, we are going to see a clear break of structure. If it tells you that the market is ready to sell, we are going to see a clear break of structure. A market is going to move in that direction. Okay, so for the bullish chart structure, it's important to note that that a bullish chart structure is made up of clear coordinations of higher highs and higher lows. Let's go ahead and write that out. It's made up of clear coordinations of higher highs and higher lows, while the bearish chart structure is made up of clear coordinations of lower highs and lower lows. Okay, so let's go to a new page to draw out what these bullish coordinations are and what these bearish coordinations are. Okay, so from here, this is a clear example of what a bullish coordination is. We can see prices moving on clear structures of higher highs and higher lows. One might ask, what does this higher highs and higher low mean? For example, this level right here, this high here is an HH, it's an higher high because it is higher than this previous high, but this is also an higher high because it is higher than this previous high, and this is also an higher high because it is higher than this previous high here that we can just put as an high because there's no high that it is higher than, right? So right here, we can say that this is an higher low because it's higher than the previous low, while this is also an higher low because it's higher than the previous low. This is also an higher low because it's higher than the previous low. And right here, we can just put this as a low because there's no low that is lower than that, okay? So now, these are clear coordinations of bullish structures. How about for the bearish structures, okay? So right here, like we said, the bearish structures entails clear coordinations of lower highs and lower lows. You guys just try trading structures instead of candlesticks, and you're going to see a clear difference in your results. Okay, so from here we can say that this level right here, let's pick it from here. This is a lower high. Why? Because it is lower than the previous high, which is also a lower high because it is lower than the previous high. This is also a lower high because it is lower than the previous high, and this level here can be regarded as an high. Okay, how about this level right here? This one can be regarded as a lower low because it's lower than this. This is also a lower low because it's lower than this. This is also a lower low because it's lower than this. And here can be regarded as a low. So these are clear coordinations of higher highs and higher lows. Now, how are we able to use these chart structures to predict clearly if a market is ready to buy and if a market is ready to sell? Okay, so first of all, if a market keeps making clear coordinations of higher highs and higher lows, just as we have seen in this example here, it means that the bulls are still in charge of prices. Okay, and if a market keeps making clear coordinations of lower highs and lower lows here, it means that the bears are still in charge of prices. We don't need any extra confirmation for us to place our entry. The only thing we are going to do is remember that after every push, there must be an exhaustion, just like we've seen on the left and on the right side. On the left side, the push is the bullish move, the exhaustion is the bearish move. The only thing we have to do is buy after the end of an exhaustion. We are going to go to the real life charts to show you how you can be able to place your trade after the end of an exhaustion. So on the left side again, this movement right here, so push movement, then the bearish movement is the exhaustion movement, and that's how that continues. On the right side, the movement here is is the sells are the push, the buys are the exhaustion. Sells are the push, the buys are the exhaustion. Okay, so our job is for us to be able to place a buy on the right side, buy at the end of the exhaustion. On the left side, sell at the end of the exhaustion. Okay, so this is how we can be able to know if the bulls are still in charge and if the bears are still in charge, and this is more concrete than just reading mere candlesticks. Okay, so one might ask, how about the situation where prices was on a bullish structure and prices now changes to a bearish structure? How can that come about? Okay, that is what we call a change of structure. So I'm going to show you two scenarios of that, where the bullish became a bearish and where the bearish became a bullish. Okay, so for example, right here, these are clear bullish structures, right, of higher highs and higher lows. The only criteria that invalidates the bullish structure, which now even gives us a trade entry opportunity because it allows us to know that the bulls are done, it's time to sell, is when the last higher low here is broken. Instead of prices, making higher highs and higher lows and continuing, there is a break of the last higher low. This is what now allows us to know that, oh, the bulls are done. It's now an opportunity for us to sell right here, hide our stop loss below the high right here, and trade, in the direction of trend or a retracement. In fact, in the last class, which is my last video on YouTube, I talked about a sniper entry that we apply, whereby instead of selling pinpoint, we do we wait for what is known as a discount. We said that those that buy pinpoint at the break of structure are selling at premium, while we that buy we that sell, I meant sell, those that sell pinpoint at the break of structure, yes, are selling at premium, while we that sell when prices pulls back, sell at a discount level. Okay, so that is the teaching that I taught extensively in the last class. Okay, so this is where a bullish structure changes to a bearish structure. How about where a bearish structure changes to a bullish structure? Okay, so for example, we see prices make all of these bearish movements, and what does prices do? The last lower high right here is being violated. This is when we say, oh, the bears are no more in charge, and right now the bulls are in charge, and we can be able to place our buy right here and buy at premium right here, or for us with smarter knowledge, we can be able to wait for a discount right here and place our buy right here. All our stop losses will be hidden right here and buy either for a retracement or in the direction of trend. Okay, so this coordination of this candlestick, it's like, you know, putting a broomstick together, right? You can be able to sweep the floor much more better. But if you're just trying to pick like a stick of broom, it's going to be very difficult for you to achieve any result. But putting it together, you have more accurate information, you have more accurate data, and this is, you know, as a fund manager, this is what you can be able to put out to your investors and let them know that this is how I trade, and they can be able to give you capital to trade because they know that you trade at top level, you trade at hedge funds level, and you know you are better in reading the markets. Okay, so for those interested in every aspect of price action trading, I have a full course with the link is in the description below, where I'm going to hold you down through what every single aspect of price action trading. I have it on full course, and I have a war room platform. Every single thing is in the link, is in the description below. Okay, so going beyond this, let's go on to the real life chart to apply the knowledge of chart structures, okay, and how we are able to become better in terms of profitability in comparison to those that just trade using candlesticks. Okay, so we are going to be using US30 as our example for the teaching today. For everybody that knows, on every teaching, the first thing we do is that we'll come onto the monthly time frame. This is because the monthly time frame, like we said, is the highest floor of the high-rising building. It's like the penthouse floor that allows us to see the entire scope, direction, and bias of prices. Okay, so what is the first thing we do when we come onto the monthly time frame? The first thing we do is to what? Is to identify the highest point of the chart. We are all aware of this. Then what is the next thing? The next thing we do is to what? Is to read the entire structures. Now I'm not reading candlesticks as an individual, you know, asset. I'm reading them together, all of these candlesticks, instead of reading them, you know, as an individual. Oh, this is, you know, this is doji and all of the funny names. This is, you know, an armor, this is an engulfing candle, and all of those names. Instead of reading them as an individual, which they are not reliable, what are we going to do? We are going to read them as a bunch. We are going to read them as a team. Okay, reading them as a team is what now gives us that excellent and flawless results. Okay, so what is the next thing we'll do? We have identified the highest point of the chart. What is the next thing we do? Read the entire structures that took prices to that point. Okay, so I also have a full course on structure circles, also linked in the description below, because now I'm going to be talking about structure circles, which are very important. Structure circles and fractals are very, very important for you to be able to trade chart structures as a pro. Link is in the description below, like I said. So we saw prices start from here. Let's just take it from here, from 1997, right? When prices made push and exhaustion in clear bullish structures, then prices continued on the same structure circle, made push and exhaustion. Then after prices did that, what did price do? Price had new structure circles here by making push exhaustion, continued on equal structure circles by making push exhaustion, continued by making the same large structures in the same structure circle, push exhaustion, all of these push exhaustion. Then started new structure circles again, where prices made push exhaustion right here, push exhaustion. Then price now started the smallest structure circle now, where prices made push to this level, exhaustion, and push to this monthly resistance points. Okay, one thing that's certain about US30 in its entirety is that US30 is bullish, because on the monthly time frame we're able to tell that US30 is clearly bullish. I can imagine trying to, you know, read only candlesticks to tell where the market is going. Imagine how complicated you would have made trading. Okay, but just reading candlesticks and putting these candlesticks together flawlessly, I'm able to tell that the market is bullish from the monthly time frame. Okay, so now what is our job? We are now going to coordinate this information from the monthly time frame to the weekly, to the daily, to the 4 hours, then go to the 1 hour time frame to pick a real-time trade entry opportunity. Okay, so right now that we've seen that the market is bullish, right? What is the next thing we are going to do? The next thing we are going to do is to have a range of focus. What is the range of focus? A range of focus is our current tradable area where, we've seen a bunch of information, right? We just want to be able to trade within a small tradable area so that we can be able to compound, right? Because obviously we cannot pick trades on the monthly time frame. So what are we going to do? We've identified the highest point of the chart here. What are we going to do? We'll now identify the last higher low, which we've all identified together right here. So this low right here is what is the last higher low of prices. Okay, so now the highest point of the chart here and the last higher low of prices here is now going to be our range of focus. Sometimes it may not be the highest points of the chart, sometimes it might be the most significant high. Either or, this window now is now our range of focus. So what are we going to do? We're just going to tag the levels, right? So from here, let's change this tag to 14. So from here, we can tag this level as a monthly resistance. Okay, and we can tag this level as a monthly HL. HL means higher low, basically, right? So now we have been able to identify what will now be known as our range of focus. So now we'll take this range of focus to the weekly time frame to keep what? To keep reading structures, which, like we said, is our strength right here in comparison to those that just read mere candlesticks. Okay, so what is within our range of focus? From here, we saw prices make what? Within this range of focus, right? Let's take it from the lowest point. Within this range of focus. From here, we saw prices make push, exhaustion, all of these movements, push, exhaustion, all of these movements, push and exhaustion, all of these movements, push and exhaustion. Then prices made the push. There was a break of structure. There was a discount here. Then prices sold down to what? To this level right here. So this level right here is an higher low level. This level can also be regarded as a 61.8 zone. Okay, if I bring out my Fibonacci, because Fibonacci is one of our strong tools in our arsenal. If you need to learn how to use Fibonacci, I have a full course on that also. So we'll bring up our Fibonacci from the low here. We'll take it from the lowest point right here. Then we'll take it to the highest point right here. So let's make it pinpoint from the lowest point right here to the highest point. So one thing we can say is that, price traded below 61.8, right? But it's important to note that 61.8 is a zone and not a pinpoint level. So price can trade below 61.8, but so far the sales are a retracement. In this case, because US30 is bullish, all of these sales are a retracement. Because the sales are a retracement, so that means that what? Price will correct back into the 61.8, which eventually prices did. So we can see prices correct back into the 61 point after it exhausted all of those sales, right? So what is going to be our job? This level right here that price rejected, the lowest point right here, let's just identify this level as what? As a 61.8 zone PRA. Okay, we can also say it's a support zone PRA, or let's just use the word support so that we don't confuse people with the fact that they'll say, price traded below 61.8. Like I said, I have a full course on Fibonacci for you to just understand that aspect. So we can see this level here is a support PRA. Where did we get the support from? You can see that this is support here, and prices came and sat properly on that support level. Okay, so what is my job? My job is to buy in the direction of trend. But how am I going to place my entry? Okay, the structures are giving me a better information in comparison to candlesticks. So all I do, this support PRA here, I'm going to read the entire structures that brought prices down to this support PRA, and at a break of structure, what am I going to do? I'm going to beautifully buy in the direction of trend. Okay, so what are the entire structures that brought prices down from this monthly resistance here? From here, we can see prices make push and exhaustion. Okay, this is a separate structure circle here because what? There's no exhaustion below it that shares equal or more length in terms of pips. But now there's a break of structure. So what structure circle has been broken? From here, we saw price make push and exhaustion. Then we saw prices here make push and exhaustion. Then we saw price here make push and exhaustion, all in equal structure circle from here. Then there's a break of structure right here. Okay, just like we talked about, a break of structure is what allows you to know that, in this case, price is not bearish again, and right now price is bullish. Okay, so prices hit this support level here, and this support level now held prices down. Okay, and the support level now triggered a break of structure. So now that prices triggered a break of structure, we know that what direction of trend, this is our take profits here. At maximum, this will exit here within this particular broken structure circle. We know that this is our exit. So now that has been defined, we already know our exit of prices by what? By identifying a break of structure. So now, the only thing we're going to do now is just identify an entry. How do we see an entry of prices? We've been able to see a break of structure. we know where price is going to. How do we see an entry of prices? Okay, so now what are we going to do? We are now going to read all of these bullish structures, take all of these bullish structures to the 4-hour time frame in order for us to read these bullish structures and see where price is going to end the discounts. Okay, so now we'll take it to the 4-hour time frame. On the 4-hour time frame, what is going on right here? On the big structure circle to start with, we saw prices from here. Prices made what? A big structure circle. So this is what? Push to this level. This is the exhaustion. This is a big structure circle. Then price now started by making small structure circles here. Push, exhaustion, push, exhaustion. You know, eventually made all of these movements here. Then price made push, exhaustion to this level. Then price made push. But let me make it wider so that, you know, we can all see it. But like we said, prices started by making what? The big structure circle. Then price now started making the small structure circle, right? And after price made the small structure circle, what did prices do? Prices broke structure. Okay, there was a break of structure. However, this break of structure is what? Is the break of the bullish structure. And on US30, we are clear that if we are selling, it's a retracement, because the wave of the ocean, the wave of the river is what? Is bullish. So if we are selling, it's a retracement. So what did prices do? Prices ended the sell at what? At this level right here that we are going to identify as what? As a resistance turn support PRA. So price ended the sell at this level here. We just identify it as what? As a resistance turn support PRA. Okay, so let's take the whole story again. Before prices got there, what did prices do? Okay, let's take the whole story again. What are the bullish structures, right? From here, we saw prices make push, exhaustion, big structure circle, right? You can see the length of the exhaustion in comparison to others. The price started small structure circles here. And after price started small structure circles, what did prices do? Prices what? Prices started even a new structure circle here, because this is where price started a new structure circle. Then prices continued from here by making what? All of these bullish movements. Then what did prices do? Prices broke structure. However, because we are selling what? Because the trade is against the flow of the market, price did not last at all. So prices ended the opportunity at this resistance turn support PRA. This resistance turn support PRA can also be seen if we bring out the Fibonacci from the low right here, where a new structure circle started. It can also be seen as what? As the 61.8 Fibonacci level. So you can see the 61.8 Fibonacci level. That's where prices ended this opportunity. It's a Fibonacci level. It's also a resistance level that prices came to turn to support. So right now we know that what? That the sales are done. Okay, originally we had already seen a break of structure here. Let's make a pinpoint here. This is the last lower high that was broken. So we know that what? All of these sales are only but a retracement. Okay, and price now ended that retracement at this 61.8 and also a resistance turn support PRA here. So what am I going to do? At a break of this bearish structure, I'm going to buy in the direction of trend, and I'm going to buy to the very top. Okay, so I'll take it to the 1 hour time frame in order for me to read that structure. Okay, so let's zoom in again and let's go ahead and read it. Okay, so what are we can see that there's also been what? There's been a break of the bearish structure that brought prices down. So let's make this pinpoint, because this is where the last lower high got broken. What are the entire bearish structures? From here, push, exhaustion, then prices eventually came here, made push and exhaustion, reading structures, push to this level, then what? Break of structure. You can see that I'm not entering on a doji or an engulfing candle. I'm entering on a more concrete system, which is what? A break of structure. So at a break of structure right here, I can be able to what? I can be able to place my buy entry, pinpoint where the last lower high here got broken. I can be able to place my entry with prices, put my stop loss at the low here, and buy in the direction of trend. I can also decide to wait for what we call a discount, whereby I'll bring my Fibonacci from the low here to the high here and wait for prices to come down to the 61.8 here. So if we are buying at premium, for example, we are buying right here, what is going to happen? Our stop loss is going to be right here. Okay, where are we going to be buying to? Remember that we are coming from a very far place, right? This is where we are coming from, where we already saw a break of the last lower high here. Okay, just a moment. We already saw the break of the last lower high here. You can see price made an higher high, and all of these moves were only a discount that came to this 61 point and resistance on support for a continuous push to the top. So if we are buying at premium, where is going to be our take profit? Our take profit is going to be around here for about a 1:3 risk to reward. Okay, how about if we are buying at a discount? Let's take it back to the 1 hour time frame. If we are buying at a discount, that means that what? We are going to wait for prices to come back to the 61.8. Okay, 61.8 level, you can see the 61 is where we buy for the discount. What is going to be our risk to reward? Let's take it back to the daily time frame. On the exact same trade, our risk to reward is going to be 1:5 risk to reward. Okay, so this is why we prefer to buy at a discount rather than buy at premium. Okay, so this is how we are able to use the pure knowledge of chart structures to be able to trade any asset at all in the market. Okay, so if you want to buy at a discount, just have patience, allow price to come to the 61.8. At 61.8 pinpoints, your buy should be placed with your stop loss at the low. However, if you want to buy at premium, then that would mean that you already bought at this level right here with your stop loss a little bit below at this point for about a 1:3 risk to reward. Okay, so if you want to learn more about how we are able to trade using this high level price action trading system, link is in the description below. Join loads of students that are also winning big and also, you know, turning their lives around and making profits in the market. Okay, so in that case, see you guys in the next teaching and see you guys in the mentorship program.